So it's not hard to know what good customer service looks like. You can see it right around here at the restaurants and the bars in this gigantic hotel I've already gotten lost in 5 times. Replicating that online and remotely is a lot harder. So we're going to get into that with some lessons learned. And we got to start. I'm not going to assume that all of you have read up at length about all of our distinguished speakers. So you get to give your elevator pitch. Who wants to go first? Tell us the problem you solve, the problem your company solves, and where does AI figure into it?
Great. So we help service-based solopreneurs. So think photographers, marketing consultants, graphic designers. So
Freelance journalists?
Sure, yes.
Okay.
Journalists. Companies of about 1 to 10 run their business. So anything from client communication to cash flow. So really the boring stuff, we want to handle that for them. Flip the 80-20 rule where they can focus on their craft and we will take care of the rest. AI fits in really well because their businesses of one, right? And so they really need to scale and grow. So for the past 2 years, we've been working on a lot of the admin tools. Those are out now. Email Composer, project recaps, meeting notes, etc. And then the vision is really to get to those like financial insights, driving new business leads for them, etc. So AI will be powered throughout the whole platform pretty soon. They're working on it now.
Okay.
And it's called Honeybook, if I didn't mention.
Honeybook. There you go.
Yes.
You're up next.
Hello, I'm Kyle. I'm the co-founder and CEO of a company called ClearCover. ClearCover is a car insurance provider, and our goal when we started the company was to use technology to streamline the expenses of an insurance business, losses and operations. And if we could do that, then we could make more money or lower our prices to consumers, hopefully some combination of both. And so AI fits into that in many ways, some of which I'm sure we'll get into today.
Moving right along.
Awesome. Thank you. Hi, I'm Deepak Srivastava. I'm co-founder and CEO of Sunrise AI. We're an AI-powered assist for enterprise B2B teams on the post-sale side. So we work with customer success and account management teams to help automate a lot of their workflows. So AI is an integral part of our product, where we train models specifically off of our customers' proprietary data.
Bhavesh?
Yeah, so I have 2 jobs. I'm the CEO of Kensho Technologies, an AI company that was acquired by S&P Global, and there I'm their chief AI officer. And so if you think of S&P Global as, the company that has S&P 500 and, all of those sorts of data sets and really interesting insights that they kind of push out that power the global markets, what Kensho is doing on behalf of S&P Global is really helping them leverage AI to accelerate how our products, our services are driving global markets all across the world. And it's an exciting time to be involved in AI right now.
Vishal?
Hi, I'm Vishal Garg. I'm the founder and CEO of Better.com. We're the leading home ownership company that helps Americans save money and time on finding a home, financing a home, insuring a home. AI has always played a large part in what we do. Our goal was to take the $10,000 cost of making a loan, the 8 weeks and the hundreds of phone calls, and turn it into a beautiful, seamless experience. And 8 years ago, we started doing that by building a rules engine that matched mortgage investors with consumers. We've now done over $100 billion of loans on our platform. And the age of AI has really revolutionized how consumers are talking to our loan officers. So we launched the first AI voice assistant in the industry, and we now are embedding in it the functionality of all of the people that do the work, and with the goal of taking the cost of making a mortgage down to 1 day and $100, so 100x better than what it exists today.
Could have used that, several 12, 13 years ago. Let's start with, I guess, first principles then. You're looking at a business model, a customer service journey. How do you decide this is where we should apply AI first? What is the first problem to solve? Is it cost, time spent, something not delivered by the humans in the loop right now?
I think it depends, right? Like, I think right now, a lot of people assume that AI is this thing that you just put in the center of an enterprise, large or small, and it's going to do everything. And you can kind of see that in buying decisions that organizations are making. And then they're kind of left with this kind of underwhelming sense of, AI isn't really driving much value. And I hear all this stuff from, the big frontier model providers and a lot of the hyperscalers that like, wow, like AI is going to like revolutionize everything all the time. And I think for us, and I'm sure the other panelists have a different view on this, is it's about like, why us? I always think like, if you're going to use AI, firstly, like, why are we going to deploy and how are we going to revolutionize our customers' experience? And for us, it's about data and insights and ensuring that we're using the application of AI to make sure that we're giving our customers what they need and doing it in a very personalized way. And for us, AI is really helping us accelerate how we can bring better insights to our customers, to the point that you were making on like, how do you reduce the time to actually get that product that's driving some value to a customer? And I think that's the value of AI. Like for us, it's about how do we make our product offerings better, more relevant, and ensure that we're driving the kind of value that our customers expect now because of AI.
I would say about personal touch, which sounds counterintuitive, but when we think about our members, their relationship with their client is number one. And so we have 10 years of client communication data and obviously fintech data as well. And by able to look at that with AI and have that bring in their tone, their voice, that personalization of them, they can then do their job much faster and have that client connection be really important. And then like the efficiency comes with it, and ideally, the growth in their revenue and income. So by having that communication data, they're able to continue to stay personal, even though it's, AI powering it.
I'll amplify that a little bit. I like the personal touch because it has to be extremely applicable to the end user. For us, it's especially at an enterprise level, it's just clear, simple ROI. If I spend X, how quickly can I get to Y? End of story, right? So for our customer base, customer success managers, hey, your team was doing 10 touch points a day with your customer portfolio. Now they're doing 30. End of story, right? So if you can make it simple, easy, and then usability comes into factor, I think it's a clear ROI case.
Kyle, do you want to jump in?
I agree. I think it has to be ROI centric, and depending on how big you are, you have to apply leverage too. Like I can tell you how I've seen this go wrong, which is where people will pick a thing that like feels like a shitty experience. I don't know if you can swear on this stage.
Oh, go ahead. We're not.
It feels like a shitty
licensed
experience, or like it's kind of the obvious choice to automate, and they find out that particular step in the process doesn't actually cost them that much money right now. Whereas there's something else that might be more difficult, or like have a couple component steps in it, but that's a much higher leverage part of your cost structure as a business, and therefore you're going to get much higher ROI out of going to that place. So you look for ROI, but sometimes you also have to like globally optimize that ROI to figure out which levers you can pull that are going to have the most impact.
Yeah, I think for us, what AI was able to do was fix one of the most frustrating experiences that you deal with when you apply for any financial services product, particularly a mortgage, which is you're dealing with licensed salespeople and they're only working certain hours. And then if you call during an hour that they're not working, you've got to basically go through a whole process of repeating everything that's happened, provide all the context. And what the AI is able to do is, because of the way we built our platform, effectively take all of that data and synthesizes extremely quickly, take all the facts, take all the interactions that have taken place, and effectively be all-knowing and have full context. And in doing so, it's not just an ROI, but we've actually seen conversion rates spike as a result of the consumers that are interacting with us through the AI, because the AI has immediate context and effectively knows that you're calling about one or two or three different things and is able to direct towards that. And so you see consumers on the other side saying, aha. And rather than just ROI, which is sort of a cost savings, you're actually improving conversion and improving customer delight. And that is the greatest ROI of all.
So you mentioned all-knowing, which brings up a question I had, not with you in particular in mind. Yes, AI can bring an enormous amount of data to a customer interaction, and they can be thoughtful. The problem is the failure mode of thoughtful can be creepy. So how do we make sure that when you're presenting these experiences to customers, they feel catered to and addressed properly, but not in a bit of a bear hug from the AI, and that the AI is not getting too handsy?
the way we do it, we tell them, the consumer, our AI assistant, Betsy, says, well, I've quickly scanned your file and I have full context. Are you calling about this? And so it's imputing the value proposition of the AI to the consumer. And the consumer is mostly well aware enough, particularly if they're dealing with a disruptive technology company that's in the mortgage space. They want their problem solved, really. And I don't think they're as worried about the creepiness factor. They assume that a computer could know it all instantly.
It's true. Applying for a mortgage, there's not a whole lot of private. The whole point is disclosing your entire financial life.
Yeah.
I have to ask Betsy, where did the name come from?
Well, we wanted
non-threatening. I assume.
Yeah, it was better.
Okay. Yeah.
And so then we tried Betty, but apparently Betty was taken, right? And then someone was like, "There's an Archie comic that like has Betty," and so on and so forth.
We're all
And then-
showing her age
so
right here.
so yeah, exactly. And so then we went to Betsy as the next best option.
I think what's also interesting is this whole notion of AI being creepy or handsy or it knows everything that's going on. But like if you take a step back and look at social media and think about like how many times have you all had that kind of experience where you're talking about something and all of a sudden on Instagram or something it pops up. Like how many people are talking about that being creepy? And sometimes I wonder if we're putting AI to some different standard than everything else that we're doing. And, especially as it relates to enterprises, to your point, like, I think it should be about delighting the customers, not making it creepy and, leveraging AI to create a better experience. I think on the consumer side, maybe it's different, as a personal user, I do find it really creepy that sometimes I'm having a conversation with my wife and then all of a sudden 4 adverts come up that, skiing in wherever. I'm like, hang on a second, like, this is very specific.
The answer is always, we track you so well on the web, it's like we're listening to you, which is not a great defense.
Right.
It's not good.
But I never mentioned it. Like, I never tracked it or anything. And I'm picking a specific resort that it shouldn't know about.
Yeah, I mean, it comes down to control and us telling them, hey, there's AI in this. This is composed by AI. You can turn it on and off. Like, that's been really important to us in our research because there's everyone from like the AI visionary, which is pretty much everyone here, to the AI skeptic, which is probably like my parents. And there's, 4 personas in between. And as long as you just give them the control, especially with our member audience, then they feel like, okay, you're not just going to go talk to my client for me without me approving, without me knowing. Like, there's always going to be a
The
click
AI
of
is
the button.
not going to like lowball my rate.
Right, exactly.
Good.
If anything, AI should be like, you should be charging more. So the control is everything.
Creepy is a heuristic too. It's like if I said, well, okay, people are worried about having a conversation that is like sort of impersonal and maybe difficult to track, and the person on the other end of the line is very results oriented. Like, I might as well be describing half of the human conversations you have with a customer service center as well. So like, I think perhaps we are too quick to label a conversation as like not good enough because it happens with AI. We've been rolling this out to consumers for a while now, and the CSAT data is equivalent or better for conversations, literal conversations with a robot, not just a chat, like a voice conversation with a robot. So like, I do not think that the data has borne out this theory that people find a conversation with AI to be worse or creepy relative to what they get at a normal call center.
Did you want to?
Yeah, the delineation for us is really like, where's the line between intrusive automation versus like improved augmentation? And I think this is where it's really difficult to like make a blanket statement about AI being creepy or not. I think it has to be broken down to like the task, right? So for example, low touch, low value alert for like a renewal conversation for one of your customers, that's great. Go at it. No one's going to be creeped out about that. But, I put myself in the shoes of one of our customers. And if you're a VP of customer success and there's a multi-million-dollar ACV contract on the line, no, I want to QA whatever messages go out, right? So you have to be able to,
Right.
going back to your control, right? Like you have to be able to turn up the dial as appropriate based on the task or
Yes, let's
goal.
get some real world examples. So like Kyle, if I probably should have rebid the insurance on our car a while ago. I would just pay the check when don't even think about it in between. What's it like?
So right now, getting a quote, we haven't done a ton of automation on like your process for getting a quote. It's mostly been on the servicing and claims side of the house. But so there's a couple examples. I won't get too long-winded. So policy servicing, this is when you call or chat in to add a vehicle or make a change to your coverage or whatever it might be. Right now, roughly 40% of all inbound customer communications are fully resolved by AI on our side. So you call in, you chat, or you talk to a robot, and our adjusted containment rate, which is the metric we use, accounts for whether or not you come back to solve it again later. Like you hang up on the robot, you come back and make the same change. Like this is, you never come back. And that 40% is low because it represents a limitation we've put on the robot as to how many things it can actually do. There are some things that even a robot requires a license to do in insurance. So you have to be careful how far you can push it. But so our, on the servicing side, containment rates are crazy high. 20% of voice, 60% of chat, give or take, fully resolved by robots right now and growing in voice. On the claim side, if you file a claim, what'll happen is you'll go in the app, you'll give us some details, you'll take some photos of the car. The first thing that happens after that is a robot will reach out to you to do what's called secondary first notice of loss, which is oxymoronic. And what it'll engage you in a conversation around additional details around the crash to make sure we have the full set of information.
It was totally the other guy's fault.
And the robot is quite good at engaging you in a conversation. It is seeking essentially 15 data points on the claim, but it will engage you in a free-flowing conversation until it captures those 15 secondary data points for us. And the opt-in rates for that are crazy high. So almost 70% of customers who file a claim through the app opt in for that secondary conversation, and just about that many finish that conversation with the robot as well.
Yeah, who else wants to walk the audience through this customer service journey via AI? Like one example. So yeah, I want to refinance my house. Actually,
Sure.
I don't, not with interest rates now.
Sure. So one of the earliest examples that we did was we had a partner LendingTree where consumers would fill out an online lead form, and then LendingTree would send it out to multiple mortgage companies at the same time. And as a tech company, we were never really very good at running a call center. And so there are other companies in the mortgage space that have 10,000, 20,000, 30,000 people in call centers that will call immediately. And we were calling within 5 minutes or 10 minutes. So the first thing that putting Betsy on the calls was we were able to take our initial time to respond down to 800 milliseconds. So we suddenly went from being one of the least responsive companies to being the most responsive company. Then, unlike other companies who would ask you basically for all the information that you would ask for in the form that you just filled out, which is super annoying to consumers, Betsy knew exactly whatever pieces of information you didn't fill out or whatever was necessary to get you a rate quote and said, hey, I just need 3 more pieces of data from you, right? Or 7 more pieces or 1 more piece of data. And then immediately am going to be able to give you a approval and a quote. And so that was spectacular. The opt-in rates to that were amazing compared to what we were dealing with. And so we turned a channel that was contribution margin neutral at best for us and that we used to do just to kind of keep getting better at it into one that became profitable for us and that we were able to scale. And then from there, what we've now been able to do is not only is Betsy able to now provide a quote, but if you share a few more pieces of data, it's now able to lock a rate with you entirely on the phone and then take in all the underwriting questions that you have and effectively move your application along so that you can effectively have a clear to close in as little as 1 day. So you're talking about going from starting a refinance to closing a refinance with other mortgage companies in 45 days to starting a refinance and having a clear to close with us in a day.
But then I still have to sign 100 pages of paper, right?
E-sign.
Okay.
Yeah, I mean, but that's part of the rules and the things that came about as part of the global financial crisis. We're hoping that will come down soon too.
So I would actually add another lens to that as well. So it's really interesting. Like it's amazing, like how much you're improving the whole process for individuals that are doing that. You know, for us, you know, our customers are almost our 35,000 people that we have at S&P Global. And it's interesting. So we actually created our own internal tool called Spark Assist. And what Spark Assist is it's an application that takes the power of these large language models, these frontier models that, you know, Claude is, you know, OpenAI's GPT series and so on, and then puts that innovation in the hands of these 35,000 people, but then creates an opportunity for them to build on top of it. So, you know, we have these things called Sparks, which are, think of those as skills almost like mini agents. And what these things are doing work of an individual And now I've done work like it might be generating a report or extracting specific pieces of information from documents out. And then we're making that available to our 35,000 people. So imagine now there's somebody in the US that's got a job very similar to somebody else in Japan. Now that person can share the value of the work that they're doing with these new applications on generative AI and have somebody else in a different part of the organization use it and benefit from that. And so if you think of the network effect of all of that, it's actually driving the experience of people leveraging generative AI for the value that they're creating for our customers. And it's not necessarily the end customer, but why I think that's really important is we're also building this muscle memory of using this new technology because we're still early days in this. Like this idea that we all know the answer right now is, I think, silly. Like I think we're going to be talking about this 5, 10, 15, 20 years. And my hope is it'll just be a new way in which we're working, like email. Like, you know, I had this conversation with my father-in-law where he was of the generation where they would send notes in those yellow folders and you just kind of sit back and wait until the response came back. And then he had to start realizing, okay, now I'm going to send emails and I'm going to have to take an action immediately. And so it's like, you know, that change is huge, just that emailing change.
So let's talk about two fears that are often voiced about deploying AI. Number one, hallucinations, confabulations. At this point, the canonical customer service example is the Air Canada chatbot that was trying to be helpful and made up a policy that didn't exist, which a court then said, sorry, Air Canada, you do have to pay this, respect the discounted fare this customer got. So the AI worked out fairly well for the customer and not so well for the airline, and great for people like me. I get to bring this example up every time. What do you do to make sure that the model you've constructed, the rules it follows, don't result in an outcome that is not good for your company, not good for your customer, not good for anyone?
Well, I'll be repetitive, I guess, because control. So everything within our product is the member has to click something, right, before that actually goes forward. Especially, you know, this is their business, this is their livelihood. We're not going to do things on their behalf without their approval. And so that's like table stakes for sure for us, is really putting that member in the front and center. And then the transparency and safety of their data, where that's going. They're giving us, you know, all their financials, their client communications, et cetera. So making that, and then the transparency, as I said, is they know AI is where it is and where it's not. A really cool example of something we're building is our loan products. We have a capital product, and because we can see the prediction of your income incoming, then our AI can recommend a loan you should take and then tell you how you're going to pay it out in future payments. Mm-hmm. And it's really there to assist you, but literally nothing will be done unless you hit approval. So
human in the loop.
I think it's recognizing where there's critical moments in whatever the customer journey is, and making sure there's, at least for our customer base, there's a human in the loop. And for us, it's not necessarily about replacing the human, right? You can still augment that human's work and do it consistently and at scale. So you're still getting the benefits of the tech being implemented, but you have the right fail-safe and the right QA around an Air Canada situation playing out.
Respectfully, I don't think the Air Canada thing is a failure. If anything, that represents a rather successful and low-cost experiment on behalf of Air Canada, right? Like that cost them $900, give or take. And for that $900, they got a lot of learning about how the customer engages with that bot, and they probably had a lot of successful customer interactions as well. There is a very famous Jeff Bezos quote. He wrote in a letter where he said, the difference between baseball and startups is that baseball has a truncated return distribution. And that's a fancy way of saying that when you hit a home run in baseball, the most runs you can possibly score is 4. But when you hit a home run in business, you can score a hell of a lot more than 4 runs. But you have to take some of those swings. And like for me, Air Canada being willing to set this loose on their customers, knowing that this might happen, but being willing to assume that risk, and then actually having to assume the failure of that risk, was probably just a good business bet by Air Canada, and one that I bet the executives at that company would make again.
I hadn't thought of it that way. Thank you.
I think we assume that humans are infallible. Yeah. Like we operate in a business.
We're not?
Yeah, we operate in a business where we have 40% churn amongst the mortgage brokers that work for us. And, you know, the average mortgage broker, the number one profession that they've had prior to being a mortgage broker was a used car salesman. And so when we think about what is it that we're replacing with the AI, to the extent that the AI gives the consumer a slightly deeper discount, to the extent that the AI, does anything that could cause a financial loss to the consumer, it's contained to that one particular transaction. And out of it, as we learn, like, fine, we might even lose $10,000 on a transaction, but the total learnings from that and then the guardrails we'll be able to build will allow us to deploy it in a much, much more aggressive fashion. So we've learned a lot over the past 6 months that we've been out there deploying Betsy. In the beginning, we were told, hey, no, it shouldn't quote rates. What if it hallucinates and quotes a lower rate? And it was like, well, what if someone has a bad day and quotes a lower rate? What if someone has a really good day and they're very happy and, they quote a lower rate? So, fundamentally, I think you have to keep advancing the future. And to the extent that you give a little to the consumer as a result, that's okay.
So your mention of how people get into the business brought up a question I'm stealing from my brother. He is an adjunct vice president of financial services firm. I cannot honestly remember whether he's an assistant or an associate vice president, but he started out on the customer service desk, then eventually got on the sales desk, and it now has his title. What does it do when your traditional entry-level job sort of goes away because an AI can, in fact, do that better? What is the new front door to the business? What does it do for your talent pipeline down the line?
I think in a business like ours, where the average mortgage broker in America is 57 years old, the number of people retiring from the mortgage industry is greater than the number of people entering the mortgage industry. You're basically, and this is out there in a lot of other professions, accounting, audit, all these other sort of professional services or professions. You're fundamentally you're helping to provide service to the consumer that if you didn't provide it, it would just get more expensive because the labor availability because of the licensing standards and all that is lower. So I think we're doing a good by doing that.
We just reduced the size of our call center by 60%, and I'll hire back about a third of that offshore because we'll roll those jobs off as the AI continues to get better. And like that is a reality of this. Like, you want to save money as a business by rolling out AI, then you have to lose the cost. And in many businesses, like insurance included, the cost is the people who work in the call center doing this thing that the AI does now. So, I mean, that is an unfortunate reality of the advancement of this technology, but it is also, were we a bigger company, maybe we would do like upskill, reskilling. We're not, we're a startup. So we have to optimize globally for the success of the business, which means you bear these costs. But again, like you do, if you want these things to move your business forward, you will almost always have to lose costs to get any value. And those costs, at least in this case, are almost always people.
So what do the remaining 40% do? And this is a broader question. When you can use AI to automate a lot of the routine stuff that is maybe not super fun for the people on either side of the line, where does human contact, where is that best employed elsewhere in that customer service journey?
I think it's differentiation, right? Like, it's just, better versus another company. It's like, how do the people project what's different about, what you're offering as a product? The commoditized part of it is now kind of going away given AI, and now you've got the differentiated part. I mean, going back to your point about, what it means for junior workers, I think it's a bigger societal question as well, by the way. Like, I think, what does it mean to be a young person in today's world, given a lot of these tasks are now being automated away and your own journey on that? It's kind of the same as Jamie Dimon saying, everybody else, everybody get in the office. That's where the best work is being done. After COVID, you're working from home. I don't buy that that's good or not. So I think that these are huge problems that are so much more bigger than just the tactical money saving thing or what it means for just one organization. I think, as people retire, as young people come up, what does it mean to go to university? And I think those are just huge questions that, technologists or CEOs or whatever shouldn't be answering. I think you need a good cross section of people.
I hope some of you were around last night to hear former Vice President Kamala Harris talk about that. She addressed job loss. Like, you can't just brush it off and say, get over it. We need to have a conversation about this.
So. Yeah, and not just with the technologists.
Yes,
like, this idea that Sam Altman or somebody knows the answer is kind of wrong. Like, I think there are lots of other people that should be involved in the conversation.
Yeah.
I think the role of the worker goes from qualification, which so many people in financial services are in the business of doing. Do you qualify or not, right? Like simple, like they're human VLOOKUP tables basically, right? And so you go from the job of qualification to recommendation. Hey, should you be getting this or not? Should you maybe pay off these 3 loans so that you can qualify for a bigger house? Maybe you shouldn't buy a house right now. Maybe you should apply for a house 6 months when you're getting a bonus. Like really having deeper conversations. And of course, maybe will the AI catch up and have those deeper conversations over time? Yes, it will eventually do that. But I think just if you take away the rote tasks, the people can perform tasks that are actually more emotionally meaningful to
They
them.
feel less like machines. Anyone else?
Well, I would close it out and say send them to Honeybook because I mean that's what happened. Like during the Great Recession and last year there was 240,000 tech layoffs. A lot of those people became consultants, graphic designers, web designers, or went in the events industry. So they are becoming independent businesses, and that's our mission. We're like, okay, how do we help these people honestly go on vacation and become 7-figure big businesses with AI? So there is like an interesting loop happening here of what are the businesses that are going to stay in business, and it is those more event and some of the craft that AI isn't there yet, and how do we get more people to get out and do that on their own.
Now, since there was a mention of licensing, financial services is a rather regulated business. It is also one of the few sectors in the American economy where there is comprehensive privacy regulation already on the books. Hate to spoil it to you, Congress is not going to do that for the rest of the economy anytime soon. How does that complicate the job? And do you have, as the token Washingtonian here, do you have any policy requests for me to bring back in case we have a productive Congress anytime soon?
I think from our perspective, going back to Washington for a second, right? Like anything that's clear, not vague, and a precise framework of what the do's and don'ts are, full stop. I think startups, growth stage companies that are innovative will find the right way to operate within whatever right framework that is. And Bhavesh, you were saying like it's not only for CEOs or C-level execs at tech companies to determine, like that's a societal thing that should be collectively ascertained. But in terms of getting a little bit more into the micro, privacy, data, that infrastructure, I think that's table stakes. That needs to be done properly, right? So adhering to global standards, the SOC 2s and ISOs of the world, that's again, table stakes. And I do think the responsibility is on tech C-level folks and those growing companies in terms of how we treat, work, and operate with our customers' data, right? We've taken a very antithetical approach at Sunrise. And I'll admit, a lot of folks in our seats sometimes are hungry for data, get froth at the mouth for more and more data, right? Because apparently it gets your AI model a lot better, right? But at the end of the day, again, going back to customer experience, does your end user care about 50 bips of additional precision or accuracy because you have X amount of more data? Like, I don't think that compromises the customer experience whatsoever or your product experience, right? So for us, we train single tenant models, ring fence each one of our customers' data. And honestly, that's done wonders for our pipeline. Like enterprises want that security, especially in this time where deployment is a big issue. Privacy is a big issue. And that gets them quicker to a place where like, all right, let's implement AI in the right way where we do feel safe and secure and are protecting our customers ultimately.
I think you also have to give the US regulators a bit of credit as well here and say, I think they've been thoughtful and measured in bringing in people to have the conversation without stifling innovation. And I think that point is really important. Like, again, really early days, yes, we should be thinking about IP laws. Yes, we should be thinking about copyright. Yes, we should be thinking about what you can do with your data, your personal data versus an enterprise's data and have some common standard. But no, we shouldn't have this kind of blanket don't do anything. Like you must get regulatory approval.
We're not in favor of importing the EU's AI Act.
But the problem with that, though, is that means that only the biggest companies that have the most resources get to partake in this innovation and growth. And actually what we want is to democratize this technology in a way in which we can have the small companies that come up with these great, delightful products and, create wealth and societal benefits across the world and across our country here. And so I'm actually fairly encouraged. And, I get to go to Washington quite a lot to talk about this subject. And I think for us, explainability and transparency is really important. Like, ground these models in the answers with things that you can audit. And I think that's important, right? Like, so that you're limiting the hallucinations, you're limiting the harm that it can do, and we're going to learn.
I think we have to take all of this in a global context. I'll give an example. Last year when we launched Betsy, we were like, this is the first AI loan officer in financial services. This is amazing. And then one of our lawyers went around and looked, and they said, well, no, actually, it's not. There's one that a company called Ping An, which is one of the largest insurance companies in China, did, and they've had this out since 2019. And I said
to a lot that happened in 2020.
Yeah.
It's forgiven.
And I said to myself, this is crazy. Like, we are behind in Western Europe and the United States on the deployment of these technologies. And honestly, if it's safe enough for a computer for you to apply a rules engine on, and the data is safe enough for a rules engine to be deployed on it, why is it not safe enough for an LLM to be deployed against it? And again, I think we have to lean forward. I think we have to really lean forward in Washington around each of these initiatives, and have the context that, this is like another space race, and we can choose to tie ourselves up with regulation, or we can choose to be bold.
Insurance is like the last bastion of federalism. So not only do we have to comply with all the federal privacy regulations, but we have 50 different state regulators who all have a different opinion on what AI should or should not do. So if you're going to lobby on our behalf, you're going to rack up some miles.
So last big question, AI server costs can escalate dramatically. They're non-trivial. Do you want to share any tips of what you're doing to keep those under control and keep that part of your ROI predictable?
For us, it's the build by partner. So, we've been able to partner a lot and then build what we have within. And ultimately, if our members are using it more and more, it's a win-win for us. So for us, it's a little bit more simple and clean cut, and using what's out there and also building our own together to complement.
I think it dramatically declines, actually. Like, you're seeing that lately with DeepSeek, new ways in which you can layer, new innovation like test time
distilled models,
distilled models and so on. And so I'm actually not worried about the cost. I think where we've got way more to do is the applications. Like, I think there's so much research and innovation going on in the kind of models themselves. And it's like confusing to me how much executives love to talk about efficacy of models and parameters and things like that, but they want to spend no time thinking about the applications of the technology that drive ROI and things like that. So I'm actually not worried about the costs. Like, I'm actually more worried about what are the applications.
Yeah, we share in that view, right? It's gonna, the compute costs are kind of like a line item. I quite honestly does not keep me up at night. Don't think about it. They're gonna be further and further commoditized. They're gonna be driven down. Where the advantage lies on the cost end for us, right? Like, we're a fairly new company, just launched last year. We have a very small lean team with a handful of FTEs. But if I were to build this product and have made the progress over the last few quarters that we have, this would have taken a team of 15, 20 folks, right? So it's really curbing looking at the efficiencies, curbing the size of the teams internally. And, we typically see AI, we were just having this conversation, Colleen, right? As a sort of external efficiency embedded in your product for what you're trying to sell. But I think it's highly underrated in terms of what are the savings internally, right? We build our own internal AI agents, and probably 3x the FTEs of what's really going on 24/7 underneath the hood internally for us.
I would agree the cost problem is temporal. So you're not really asking yourself whether or not you can afford to do this. You have to ask yourself, when can I afford to do this? Right? So you may not be on the cutting edge. You may have to wait a bit if you want to do something that's very compute intensive and expensive today, but you're not saying I'll never be able to do that. You're just saying I can't get to this until the costs have come down, and that cost curve is pretty steep. You may not have to wait that long.
And had you chimed in on that?
Sure. We've seen the ROI be about 400% relative to all of the costs rolled in, both the human capital costs and all of the compute costs. And it's been the reason why now 100% of inbound calls at Better.com are answered by Betsy. And so, we've leaned in really, really hard. Partially because we can. We've got a tech stack that's built specifically to be able to take advantage of all of the functions that AI can do, vis-a-vis our competitors who all have these disparate systems that they use, a CRM system, a pricing system, an eligibility system, all these different systems. And so we've just been trying to press our advantage. And so compute costs are not a problem at all. I think if you've got an advantage, you should press it.
Okay. To recap, I just want to highlight for the audience, anybody who's taking notes, the biggest surprise takeaway I got was don't be so worried if your AI customer support experience gives the customer a better deal than they expected. That's a learnable moment. Perhaps you keep the customer that way. That's one thing I didn't expect to learn from this. I like learning from this. So in conclusion, if you want to make a car insurance claim, refinance your house, automate your freelance relationship, talk to their chatbots. If you want to know more about how these companies do their work, talk to us. We're around at least all today. I'm here through Thursday. Thank you for your insights. Thank you for your attention.